Just like what happened to the economy in 1999 and 2008, nobody knows what Burry sees. Michael Burry just dropped a bombshell on one of the most shocking crises of all time, and now the world is about to wake up soon. Michael Burry is known to be a controversial man. He is despised by many, even the world billionaire Elon doesn't really flow with him for reasons best known to him. Surely, when it comes to investments and financial predictions, he's simply a man to reckon with. Now, Burry is known to make wild and strange financial predictions on Twitter. He does not really keep sensitive tweets, as he tends to delete his tweets minutes later. But with the look of things, Burry has been so right, as he's predicting the severe inflation we're experiencing today. Even if we don't talk about the current inflation, what about the massive financial collapse prediction that we might encounter very soon? Who is this man, and how does he know these things? Is he a financial prophet, or is he just an ordinary man who guesses things rightly? In this video, we're going to look at his recent history, the current financial collapse, and Michael Burry's future predictions regarding this financial crisis. Watch the video to the end because we've got a lot to cover, and trust us that it's going to be interesting. Now, indeed, Michael Burry has made a big name for himself within the investing world and beyond over the years, as his prediction of the subprime housing market crash was the basis for the movie The Big Short. Because of the prescience of his investment and the additional attention it gathered, many investors like to track Burry's portfolio moves and worth towards his investment plans. Now, one of the things people love about him is his precision when it comes to trading. His trades during the most recent quarter have certainly captured the imagination of investors, but now he's come to give us another shocking news in the world of economy. Since the COVID-19 pandemic first hit the world economy has been on a descending scale. And one of the strangest parts is that the situation of things just keeps getting worse. With a record of high inflation rates and a shortage of labor, Michael Burry believes and affirms that a worldwide recession is just around the corner, and he has some very valid arguments to back up his claims. We know him to be a man of accuracy and precision in the economic world. There was a time when Burry accused the Biden administration of redefining what qualifies as a recession, and denying the U.S. economy is just days away from officially entering into a deep one. Goldman Sachs analysts said that current market levels have only priced in a minor recession and warned that a sharper stock sell-off is still possible. Much of the valuation derating has been due to higher inflation this year. According to Bloomberg, unless bond yields start to decline and buffer rising equity risk premiums due to recession fears, equity valuations could decline further. The bank's strategists also predicted that corporate earnings might suffer in the year's second half due to higher costs and a slower consumer spending. When there's an excess supply of goods and low consumer demand, prices are expected to drop rapidly. This is why Burry is hinting at an upcoming supply glut. What this means is a situation when retail stores meet much supply and less demand. So something bad might happen to the market when supply is more than demand. Due to this supply glut, retail stores need to start dropping prices by introducing mass sales. Burry also advises people a lot of investment. This is what Burry means when he says that Christmas will come early in July. Of course, we know that Christmas sales always happen because businesses produce too many goods for sale. However, the sale is only possible if prices of goods drop. When there are many products on the market, corporate profits will definitely drop, and when this happens, it will cause people to be laid off or see their salaries cut. The problem with this is that when a business chain orders extra orders, there is every tendency for the supply to be magnified to unhealthy levels. The supply chain typically includes retailers, wholesalers, and manufacturers. However, the inflation was extremely high in June, and no bids whatsoever for mortgage-backed securities. This inflation means that there was practically no price that these purchasers were willing to pay for regarding mortgage-backed securities, and of course they are considered bonds secured by home loans. All these happenings and signals suggest that something more terrible is still bound to manifest. Although inflation wants to be stopped by the Fed, sadly everyone isn't on the same page with the Fed. This made California decide to offer an inflation relief payment to its citizens, and Burry went against it in one of his tweets. He pointed out the idea to be ridiculous because giving the so-called free money won't make anything better but will worsen inflation. He ridiculed the state's behavior by saying that this is how this works. Alexander Tomic, an associate dean of economics at Boston College, made it known that there must be a control of inflation. It had to be done as soon as possible since wage growth is currently outpacing inflation. The big question now is whether this can be achieved without further destroying the economy. According to Burry, the chances of the U.S. economy entering a recession by next year are much greater than we can imagine. Rising gas prices and a slowing economy are currently putting the world's largest economy at risk. The odds of a recession in the next 18 months are over 50%, but it may not be easy to predict when this will happen. However, some experts also predicted that the economy would enter a technical recession, defined as 2 consecutive quarters of negative growth. This could also happen at the end of the second quarter of 2022. Even if the United States survives this downturn, there is still the tendency to have a general slowdown that will knock the wind out of the economy's sails by late 2023. In a college speech, Buffett said, "Most behavior is habitual, and the chains of habit are too light to be felt until they are too heavy to be broken." He pointed out that among the most important habits, the major one to be formed is how to save money. This should be instilled in people as the world economy is already worsening. The biggest mistake you can ever make is not learning the habit of saving properly. That's why he suggests setting automatic reductions in paychecks. It is also helpful if one transfers money into savings or investments to help make this habit regular. He said, "Do not save what is left after spending, instead spend what is left after saving." This is why Buffett always says you should always invest in yourself as much as you possibly can. No matter what it is, you shouldn't just be idle. This is because he has foreseen that the current economy is not going to favor us. He said anything you do to improve your talents and make yourself more valuable will be paid off in terms of appropriate real purchasing power. When you invest in yourself, the return will always be favorable for you. Unlike assets, one's skills can't be wasted or lost. What you have in you cannot be taken from you. That's the code of investing in yourself. From going to school and improving your knowledge to overseeing training or taking a volunteer post, all these investments will certainly improve one's chance of becoming wealthier. The more skills you develop, the wealthier you'll be. And that's it for today, guys. If you enjoyed the video, do well to subscribe to our channel and give this video a like. Thanks for watching, and we'll see you in the next video.